So we got a couple of interesting ones in the finance sector today. Blackstone. Blackstone. They sound scary, huh? Blackstone, sitting at $112, is up 4.57% today. Over the past 5 days, it's up 7.1%. Over the past month, it's down 14.76%. Over the past 6 months, it's down 39%. Year to date, it's down 27.34%. Over the past year, it's down 24.21%. Over the past 5 years, it's up 54.55%. On a maximum chart going all the way back to June 22nd, 2007, it's up 225.58%. That's Blackstone. Okay, Blackstone has a dividend of 4.23% here. Quarterly dividend of $1.18. A PE ratio of 28.94. 52-week high of $190.09. 52-week low of 101.73. With an EPS of $3.87. It's got about 5,000 employees with 742.18 million shares outstanding. Huh. Look at that. Let's go right into an article about Blackstone, why they're up today. Look at this, they're going to try and make me sign up? Surely not. This was written earlier today. Let's go right into it. What happened? Shares of alternative investment manager Blackstone jumped 4.5% in the afternoon session after the broader market advanced amid a more stable investor response to geopolitical tensions. Major U.S. stock indices, including the S&P 500 and the Dow Jones Industrial Average, traded higher. This market-wide lift occurred even as crude oil prices resumed their upward movement due to continuous disruptions. Investor sentiment was also supported by positive news from the airline sector as Delta Airlines raised its revenue outlook, citing accelerating demand. Additionally, a tentative sense of optimism emerged from comments suggesting a major international conflict could wind down relatively soon, helping to lift equities off their lows. Cool. The shares closed the day at $111.97, up 4.5% from previous close. Is now the time to buy Blackstone? Question mark. Stupid. What is the market telling us? Blackstone's shares are somewhat volatile and have had 13 moves greater than 5% over the last year. In that context, today's move indicates the market considers this news meaningful, but not something that would fundamentally change its perception of the business. The previous big move we wrote about was 4 days ago when the stock gained 4.2% on the news that the stock rallied amid a broader rebound in private credit-related names. The move was part of a wider recovery for companies in the private credit space, with other firms in the sector like Ares Management also seeing their shares rise for the same reason. Blackstone is down 29.4% since the beginning of the year, and at $112.07 per share, it is trading 40.6% below its 52-week high of $188.68 from September 2025. Despite the year-to-date decline, investors who bought $1,000 worth of Blackstone shares 5 years ago would now be looking at an investment worth $1,473. One more thing. The $21 AI application stock Wall Street forgot. While Wall Street obsesses over who's building AI, one company is already using it to print money and nobody's paying attention. Okay, now we're getting into some other silly shit. Who wrote this? Stock Story. cool. Pretty cool. All right, let's go back. Let's do their earnings. Yeah. So check this out. They beat back in January 29th, 2026. They were predicted to get 1.53 EPS. They got 1.75, beat by 14.06%. Interesting. They also beat on revenue. They were estimated to get 3.7 billion and they got 4.23 billion, beating by 14.55%. Here's at a glance. Blackstone beats revenue and EPS. Blackstone reported a fourth quarter adjusted EPS of $1.75, significantly outperforming the estimated $1.534. Why would they say that like that? While reported revenue of $4.23 billion also exceeded expectations. Record assets under management reached. Total assets under management reached a record $1.27 trillion in Q4 2025, driven by $71 billion in quarterly inflows, the highest in over 3 years. Strong guidance for 2026 growth. Management anticipates 2026 will be the busiest year for product launches in the firm's history, supported by an IPO pipeline that has doubled in size over the past year. Infrastructure and private wealth. Surge. The infrastructure platform grew 40% year over year to $77 billion, while private wealth fundraising increased 53% in 2025 to reach $43 billion. Market reaction and share performance. Despite record results, the stock saw a pre-market decline of approximately 3% as investors weighed strong performance against broader market concerns and a slight miss on GAAP profit expectations. And if you take a look at their little previous reports here, you can see they don't always, they miss sometimes. Going back to Q3 2025, they missed on revenue by 5.69%. And then in Q4 2024, they missed by 26.79%. And then in Q2, they missed EPS just barely by 2.34%. There's a few more here. A few more misses. I don't know, they seem pretty cool though. Seem pretty interesting to me. Am I going to buy Blackstone? I don't know. Probably not right now. But maybe you can. Who knows? Blackstone. Alright. Let's find another one. Sitting at... Alright, here we go. BlackRock sitting at $970.25. Up 0.86% today. Over the past 5 days, it's up 3.97%. Over the past month, it's down 9.48%. Over the past 6 months, it's down 14.21%. Year to date, it is down 9.28%. On a 1 year chart, it's up 1.36%. Over the past 5 years, it's up 33.08%. On a maximum chart going back to October 1st, 1999, it is up 6,771.97%. BlackRock. So they have a dividend of 2.36%, quarterly dividend of $5.73, PE ratio of 28.14, a 52-week high of $1,219.94, 52-week low of $773.74, with an EPS of $34.51. Shares outstanding 155.54 million and about 25,000 employees. Cool. So let's read the perspectives from across the web. BlackRock advanced approximately 2% in early 2026, outperforming the S&P 500. Year-to-date, strong Q4 2025 earnings and record assets under management drove initial gains through technical consolidation. Though technical consolidation has emerged, analysts project continued growth in the next quarter, supported by accelerating organic fee growth and a dominant position in the private market space. All right, the bullish view. Record assets under management and strong inflows. BlackRock reached a milestone $14.04 trillion in assets under management at the end of 2025, driven by $698 billion in full-year net inflows. Organic base fee growth accelerated 12% in Q4, signaling robust client demand across iShares ETFs and technology services like Aladdin. Now we're getting into something very interesting stuff. Expansion into private markets. The firm is successfully pivoting toward high-margin private markets through major acquisitions of GIP, HPS, and Preqin Management. Expects 2026 to be the first full year as a unified platform, aiming to capture increasing demand for private credit and infrastructure investments. Enhanced capital returns. The board approved a 10% increase in the quarterly cash dividend to $5.73 a share, payable in late March 2026. Additionally, the company boosted its planned share repurchases to approximately $1.8 billion for 2026, reflecting strong operating leverage and cash flow confidence. Whoa, pretty cool. Private credit liquidity risks. In March 2026, reports surfaced of BlackRock limiting withdrawals from certain private credit funds, specifically the HPS Corporate Lending Fund, due to increased redemption requests. This development highlights potential liquidity and valuation risks within the firm's rapidly expanding alternative investment segment. Technical resistance and neutral momentum. Technical analysis indicates a sell signal from the 3-month MACD and short-term moving averages. The stock faces significant resistance near the $1,137 and $1,209 levels, with momentum showing signs of sideways consolidation rather than a clear directional breakout. Macroeconomic and fee pressures. Rising public and private sector borrowing, particularly for AI infrastructure, may keep interest rates elevated and exert upward pressure on borrowing costs. This macro environment, coupled with ongoing fee compression in the broader asset management industry, could weigh on future margin expansion. Interesting. All right, let's do their earnings and stuff real quick. And then we'll read an article. Okay, so they beat on earnings on January 15th. They were predicted to get $12.19. They got $13.16. They also beat on revenue. They were predicted to get $6.7 billion. They got $7.01 billion, beating by 4.61%. Okay. We're back. Here we go. We'll just look at the last time that they missed. So we got Q2 2025. They missed on revenue by 0.41%, and then they missed in Q1 2025 by 0.68%. What's the difference in BlackRock and Blackstone stocks? Yeah, so what I'll probably do is make a video, just put all this crap about these two stocks in the same video. And then maybe I'll break them down individually as well. Who knows? And put out more content, so. It is a common mix-up. This according to Gemini. It is a common mix-up, and for good reason. Not only are the names nearly identical, but the two firms actually share the same DNA. BlackRock has originally founded as a division of Blackstone before spinning off into its own independent entity in the 1990s. Today, they are two very different beasts in the world of finance. BlackRock, ticker BLK. Think of BlackRock as the king of the market. They are the world's largest asset manager, primarily focused on public markets. What they do: they manage trillions of dollars for everyday investors and huge institutions. They own iShares, the world's largest provider of ETFs. Business model: they make money through relatively low fees on a massive volume of assets. Key tool: they own Aladdin, a massive software platform that many other banks use to manage risk. Who's it for? Who it's for? If you have a 401k or buy an S&P 500 ETF, there's a high chance you are a BlackRock customer. Blackstone, ticker BX. Think of Blackstone as the king of alternatives. They focus on private markets and hard assets. What they do: they are the world's largest alternative asset manager. This means they specialize in private equity, real estate, and credit. Instead of just buying stocks on the New York Stock Exchange, they buy entire companies, office buildings, and suburban housing developments. Business model: they charge higher fees and often take a performance fee, a cut of the profits, when they sell an asset for gain. Vibe: they are active owners. They buy a company, fix it up, and sell it years later. Who it's for: historically, they served ultra high net worth individuals and pension funds, though they've recently opened up more products to regular investors like BREIT. And Gemini gives us a little graphic here. Their primary focus: BlackRock is public markets, ETFs, mutual funds. Blackstone is private markets, real estate, private investment. The main brand: BlackRock is iShares. Blackstone is Blackstone Real Estate and private equity. Total assets: around $10 trillion for BlackRock. Blackstone, around $1 trillion. BlackRock, higher volume, lower fees. Blackstone, lower volume, higher performance fees. Risk profile: BlackRock, tied to the overall stock market health. Blackstone, tied to interest rates and property values. Interesting. The why. The why behind the names. When Larry Fink, BlackRock, split from Stephen Schwarzman, Blackstone, they wanted a name that showed they were related but different. They settled on BlackRock because a rock is a smaller, more specialized piece of a stone. Funnily enough, the smaller one eventually grew to manage about 10 times more money.